In this episode of Hedge Interview, I'm speaking with Brian DeLucia. He is the managing partner of Arrivato, a family office located in New York on the East Coast. Brian's going to share with us some of his key interests and concerns as he navigates today's investment marketplace. Thank you for joining us today, Brian. So your experience includes real estate development, especially within multifamily rental communities and special situations lending. You also established a leading sports media firm. Let's get started with the first question, which is more about your primary focus right now, your area of expertise at Arrivato.
Well, thank you. Our focus is first centric as a family office. Our family and some of our family friends have been active in real estate development, both in land and building development over the last 30 years now. And secondly, we also handle the U.S. business interests for a very large non-U.S. family in larger real estate transactions, but also identifying strategic relationships and underlying technologies in energy, agriculture, defense industries, as well as looking at some of the healthcare and impact sectors. And lastly, we also handle some consulting work as well. Discreetly kind of aligning interests, whether it is special situations across several industries or discrete dispositions of assets within real estate, just utilizing our inner circles to bring together those opportunities, as well as, working to elevate traditional economic driven, companies, bringing strategic value and leadership to those companies as well.
That sounds very diverse. It looks like you look into a lot of different things, which must keep your job very interesting.
Oh, absolutely. I think it's important to remain engaged, in the business community, from a broad perspective to understand, what is happening out there in the marketplace and certainly out on Main Street on a day-to-day basis.
So on that note, what's happening in today's markets that really excites or inspires you, sort of like the good things that you are enthusiastic about, I guess, in a global macro perspective?
I see a lot of people chasing what I guess I call the latest flavor of the year. But one of the things that I enjoy doing is kind of getting outside of that and above that, enjoying meeting some talented, entrepreneurs today that are really creating real social and economic impact, to have the scalability to touch an entire, global population in just everyday life. So one thing that I maintain that, being excited about is just the leadership as a family office and as a family office community that we bring good traditional industries like manufacturing, logistics, distribution, business services, and also, I think just within that area, you see a lot of the investors traditionally try to financially engineer these companies for their own interests. As family offices, we take a little bit of a different approach, elevating these companies with like-minded, experience to bring that strategic value and leadership and expanded Rolodex to truly elevate these companies, to modernize them and create more jobs. So just I would say, look at this from a much, much different perspective than, like we just said, financially engineering these companies or chasing the latest, flavor of the year, essentially.
So almost like with a little bit of a social responsibility type of element to it, but not as formal as a social impact investing, but just being responsible about what you're choosing to get involved in from a higher level, I guess.
Yeah, absolutely, Jennifer. I definitely agree with you on that. We definitely try to bring a broad picture, but just also it's just something that's real life and I think a little bit more, authentic when it's all said and done.
Okay. What's happening in today's market in the markets that might concern you or make you feel worried or nervous?
Well, I think actually, let's play off the word authentic for a moment. The lack of authenticity in the market. You just see a lot of people chasing businesses, chasing transactions, bidding up assets and companies. And ultimately, it's creating a lot of overpricing, a lot of over leverage in the market today. And I think, when the music stops, we're going to find ourselves with a lot of companies that are over leveraged with debt And ultimately, at the end of the day, it's going to hurt the heart of these companies, which is the everyday workforce. And that's probably the biggest thing that concerns me almost every day as, we're, moving closer and closer to the end of the cycle.
Yeah, that makes sense. So what new investment trends or developments intrigue you right now?
Well, certainly everybody right now is chasing blockchain and opportunity zones. But let me answer this, I think, from the perspective of a family office or the family office community in general. I like the fact that, as families, we're getting together more often. We're engaging in more conversation with one another, trading ideas. I would say kind of keeping an eye out or looking out for, one another to truly identify opportunities that, we could truly scale, whether it's, real estate developers creating better places to live and work, or identifying those traditional companies and elevating them to the next level, which definitely is creating a lot more jobs, unlocking more liquidity to address, special situations that are allowing, very sharp and talented people to execute on opportunities, beyond the boundaries of just traditional debt channels, helping to create more economic development within communities, where liquidity has dried up, and also just truly giving talented people, up and coming entrepreneurs a real voice in the marketplace. So those are the things that I see, trending just within our, circles.
So would you say that you collaborate with your family office tribe, so to speak, that there's a lot of collaboration?
Absolutely. We certainly have, I think, a very close-knit community, and it's groups of people that are very like-minded, have all created, their wealth in, specific industries or endeavors, as well as even the people who work, for families and run their family offices. Yeah, I think there's a certain level of camaraderie, certainly here in New York City. We definitely see that. We get together on a regular basis, whether it's in roundtable sessions behind closed doors or private dinners. And it's a lot of fun just to,
I bet it is.
just to sit and, and just have these conversations every day in terms of how we look at different things, or even little one percenters. And it was really interesting. Just in fact, about a week and a half ago, we were in a round table, and it was a grandson of a very, very famous family in the financial services industry. So this was, third generation, and his wife runs, their family essentially. And she was just giving some little one percenters in terms of how she looks at things in terms of maybe very specific, managers and it's just, when you're around that and you're in that dialogue every day, it's a little bit more real. And that's
Right.
that I'm excited about, because when you separate, what I call the white noise, where you have just a lot of professionals out there, they're chasing deals or chasing their next commission checks or their own self-interest in terms of, their own economics. So it's very refreshing when you just have a group of like-minded people in the same room and just having these, real conversations about, how we can help one another out, how we could bring real value to, to real businesses.
Right. So when there's sort of consensus around certain ideas that you're sharing, that must build your confidence one way or the other about something that's positive or negative. That must reinforce your
Oh,
faith
absolutely.
in doing something or not doing something or moving in a certain direction.
Oh, absolutely. And also, I think along the same lines, for families that maybe are diversifying, if there's a family, let's say, that created their wealth in oil and gas, and now they want to be a little bit diversified, let's say into logistics companies, that, ultimately they could align themselves or partner with a family that built their wealth in the logistics industry, and going in and alongside of them into maybe a logistics company that we can help, lift up at the end of the day and elevate to another level or modernize in today's, marketplace. And that's something that I think definitely brings a comfort level as well.
That's refreshing to know that there's that level of sharing of ideas rather than coveting ideas. That's really, really great.
Definitely.
So without naming names, give an example of how a company or asset manager or entrepreneur truly impressed you. What was refreshing, or what did they do differently than others?
Through one of our inner circles within, the family office community, we had there's a couple other families that, I'm friends with that suggested I come sit down, for a private dinner. And this was about 6 weeks ago now. And, they introduced me to a group that they've been invested into for about a year and a half now. And what's interesting is they're kind of, I guess you would say, working with a lot of early stage companies, but they're not, startup companies. They're kind of working outside that traditional Silicon Valley channels, to align with talented entrepreneurs that already gained some traction in the marketplace with very, I would say, phenomenal, but very fundamentally sound businesses that are, en route to just creating some real positive impact across the world right now. And that's the one thing that I was very, very excited about that group, because I thought they showed a lot of empathy and just a real fundamentally sound approach, with just real people. And that's one thing that excited me.
Mm-hmm.
Yeah.
Oh, that is very positive. That's a very positive thing to get excited about. So conversely, what's something that a company or entrepreneur, asset manager has underestimated in their process of attracting capital? Let's give an example of how someone has missed the mark by overlooking something critically important to you.
Well, yeah, definitely a few critical mistakes I see, especially, if they're approaching family offices. And today everybody's looking to raise capital. Certainly they're all targeting the family offices, and at some point, especially with some of the flavors of the year in terms of, let's say, blockchain technology or opportunity zone funds. Now everybody's coming after the family offices, but it doesn't matter whatever the business is. Endeavor is, or the strategy is. I think the first mistake I see is often in their first round, they're looking to raise too much capital. I mean, whether it's like 50 or 100 million, in my opinion, start out small with your first round. Start out with like 10 million and get oversubscribed quickly. And I think, when you do that, it creates a real energy and a real momentum. And to me, you have a little bit more credibility when you're starting more pragmatically. So get oversubscribed, show that there's some energy and some momentum to where you have to quickly start fund two. So that's one, I think, very, very underrated aspect that a lot of capital raisers are making a mistake on. The other thing is just what I call the Me Too syndrome, and that goes back to what I just said about everybody's raising money right now for the blockchain ventures or the opportunity zones or multifamily value add deals. And my question always is, what are you doing differently, or what are you offering differently than the next guy? What information do you have access to that nobody else has that ultimately is going to differentiate you? Because everybody's pitching the same thing every day,
Right.
and it's just not compelling. And it really comes down to what's the alignment of interest with investors, especially if you're looking to align with a family office. Is because at the end of the day, there's a lot of competition for dollars, and especially in our circles. And I think you really have to quickly answer the question: what are you offering that's making it compelling to write that check? From an economics standpoint. So I guess that's one area that I think is certainly a big discussion, or certainly a lot of discussion amongst some of our closed door dialogue among family offices.
Definitely. I mean, I've heard that as well, that defining your competitive edge, your value proposition, what makes you different, because if you're just like everybody else, there's really no point. I mean, if everybody's the same, you're looking for somebody who can differentiate themselves in their offering in a critical way. So I can totally appreciate that. So lastly, what's one thing you hope will happen by year end or anytime next year?
Well, I mean, I think there's two things. Number one, you certainly want to see, just from a geopolitical perspective, maturity in society again. I mean, we've become a very, very immature society with all the backbiting, and we're falling for a lot of the traps right now of these arguments that separate ourselves more than bringing ourselves together. And this isn't a Democratic or Republican issue. I mean, none of the sides have the answers or the solution to everything. I mean, we have to get back to understanding that both political parties play a very, very important role in this country, and we have to start it. Stop identifying as Democrats or Republicans. We have to look at ourselves as we're Americans and we're people, and we live in a society that's certainly has become very global, and we have to understand that the narrative is different today. I mean, we're an evolving society. And if if the narrative out there doesn't fit the narrative that you grew up in, doesn't mean that it's wrong. It doesn't mean that you're right and they're wrong. It means that we have to listen to each other. Yeah, and I think understand each other a little bit more and find those common, levels of ground that where we can work together. Because, like I said, at the end of the day, nobody's right and nobody's wrong. Nobody's values are superior to anybody else's. I don't think, these arguments about patriotism, there's not one person that's more patriotic than the other. I mean, we just have to work on, listening to each other and finding ways to, get along and certainly work together, I think, for the common good and help lift each other up again, as a society. And then I think from a business perspective, when it comes to raising capital, we have to start looking at modernizing that process. I think, especially in today's world, I mean, we're becoming a lot more modern of a business, society, and people are out there raising capital in very, very tired manners, ways that I think they're what I would call the 1980s way of capital raising. And right now we're in the year 2018.
I'm so glad you're talking about this. So tell me what you consider to be antiquated versus what you would like to see more of in terms of getting more advanced.
Well, no matter what year we're in, you always want to start with the friends and family, your core base of what I call, I guess, the country club level, and at some point you outgrow that. Whether you're let's say just building a real estate portfolio or whether you're selling widgets, no matter what, you outgrow your audience at a certain point. And, and then what happens is that, most times, let's just say you have 40 or 50 or 60 or 80, investors or an audience of investors that anytime you have a transaction or an endeavor, you pick up the phone and you reach out to that base. But like I said, at some point, in your evolution as a business, you outgrow that. And you have a couple of different choices. Some people are very fortunate that they can align with one ultra high net worth investor that's going to write a check and strategically align with them, which certainly it creates a different economic relationship with an investor, but a lot of benefits to that. But a lot of people aren't fortunate enough to be able to attract that one ultra high net worth, investor, maybe because they're playing in tertiary markets or very tertiary type of business model, and you have to continue building a larger audience of investors. And the biggest mistake that we keep on seeing today is, if you have 60 investors, getting that 61st investor is very difficult. And you have a lot of people that are going out to luncheons and dinners and coffee meetings. And ultimately, to get that one investor, that's a lot of meetings, a lot of costs to just get one investor. And I think with today's technology, there's a lot of modern ways to scale this up. with, certainly with very proprietary technology and data analytics and just predictive analytics by targeting, number one, the right data and looking at historical algorithms of very specific investors' behaviors and just using very sophisticated technologies and proprietary technologies to start building larger audiences of investors, having investors start raising their hand and saying, hey, we're interested in getting to know you and working with you in the future. And that's something where crowdfunding was kind of a start to that. But ultimately, at the end of the day, I don't think that's the long-term solution, mainly because you're probably not, in a lot of cases, building long-term proprietary relationships. But I think if you learn how to utilize proper data on large scales and, like I said, utilize the right technologies, there's a lot of very, very interesting things that you could do in terms of aggregating much larger audiences, going from 50, 60 investors to, let's say, a few hundred, or if not 1,000 or a couple thousand investors, over the course of 6, 12, 18 months. So that's the one thing that I hope to see, companies evolve their approach, over the next year.
Mm-hmm. No, that's very interesting. That'll to make a much more targeted approach using data.
Absolutely.
Brian, thank you so much for your insights. This has been so helpful.
Oh, you're welcome, Jennifer. Pleasure.